This video is on the technical analysis of Volatility 75, and at this point in time we find ourselves on the monthly chart. And just to recap, the last time we spoke about this index, we spoke about how we have this huge M structure, and we mentioned that because it started over here, we expect price to head down to around this level, which is in line with where it started. We also saw the neckline of this M structure being at this point, and at this level over here we saw price break into the bottom side of that neckline, heading back up to the neckline to test it, and at that neckline, which is over here, is where we would have looked for those potential selling opportunities. To add to this, we also can see at this point in time that the market is in and around a very important support level, as we've had multiple rejections at that level. And in fact, let me just actually add that support area, and just keep in mind that support and resistance are areas and not so much actual lines like I have here, right? So we saw the market heading down to this area, which is the support line, and we had a rejection at that level where we saw the market actually heading back up to around this level over here. And at this level over here is where we should have looked for those potential selling opportunities again. Why do I say so? That is because if we actually go to the lower time frames, we will see that we actually have a smaller M structure over here, and it has a neckline at that point, right? And you guys know that whenever we have these M structures, ideally we want to see the market closing below that neckline, heading back up to the neckline to test it, and generally speaking, where we have that neckline is where we look for those potential selling opportunities. So we should have looked for potential selling opportunities at that point, as the anticipation is for the market to continue to move further down, right? Anyway, I'm just going to add a neckline for that huge M structure first. Just bear with me while I do so. And just remember, guys, as I said, necklines are areas, they are not actual lines, right? But we could say that that's the neckline of that huge M structure. I'm also going to add the neckline of that other smaller M structure that I spoke about. It's not really visible at this point in time, but as we head down to the smaller time frames, you will see that we have a small M structure over here, right, which has a neckline at that point, right? Anyway, let's head down to the weekly chart and see what's happening down there. And here we are on the weekly chart. I just hope that my lines are not too confusing, but just to go back to what I said earlier, right? I mentioned that we have that huge M structure that we have on the monthly chart, and I also said to you guys that we have the smaller M structure over here, which had a neckline at that point. We saw the market break into the bottom side of the neckline, heading back to the neckline to test it, and at this point is where I said we should have looked for those potential selling opportunities, as the anticipation at this point in time is for the market to continue to move further down, right? So what I'm going to do now is I just want to look and check if this neckline actually aligns with any key numbers on the Fibonacci retracement tool. So just bear with me, guys. Let's see. Right, and there we go. We can see that the neckline, which is over here of this M structure, aligns with the 50% Fibonacci retracement level, and this adds as further confluence that indeed we should have looked for those potential selling opportunities at that level, as the anticipation is for the market to continue to move further down, right? Anyway, let's move forward. What else do we see on the chart that we should be paying attention to? So as much as we have this M structure over here, which has a neckline at that level, I hope you guys can see that we seem to have an inverted head and shoulders pattern forming at this point over here, right? However, we need at least one bullish candlestick to form at that side for this pattern to be confirmed. But at this point in time we don't see any. But should it happen that at this level we get one, chances are that we will likely see the market move further up, at least to this level again, where we have the neckline of this M structure, right? Anyway, but just remember that based on the monthly chart, the anticipation is for the market to continue to move further down, because we have that huge M structure, right? And we expect price to move to around this level, which is in line with where it started, more or less. Just keep that in the back of your mind. Anyway, from here, let's head down to the daily chart and see what's happening down there. And here we are on the daily chart. And the first thing that I'm going to do in regards to my daily chart is to add my daily channel. Let's see, just with me everybody. And there goes our channel more or less. And just remember that we need to ensure that whatever drawings that we do add to our charts are as accurate as possible, just to ensure that at the end of the day, when we do ultimately execute, our execution is also very much in line with our analysis, right? Anyway, there goes our channel more or less, right? And we can see that in as far as the daily chart goes, we are indeed in a downward trending market, right? Which speaks to what I said earlier on the monthly chart, that we have that huge M structure and we want the market to move further down to close in line with more or less where it started, right? Anyway, let's just recap, right? Remember, we spoke about how we have this M structure here, which has a neckline at that point. Price came back to the neckline, and I said at this point is where we should have looked for those potential selling opportunities. To add to this, I also spoke about how we have potentially this inverted head and shoulders pattern, and on the weekly chart we're just waiting for at least one candlestick to close at that point. And if it closes as a bullish candlestick, we may potentially see the market actually move further up to around this level. But just keep in mind that we also have this barrier over here, which is a trend line, and as much as we may get an entry at this point, as the anticipation would be for the market to move to this level, what may actually happen is the market may only move to around where we have this trend line, and at that trend line we may see the market move further down, because at the end of the day we are in a downward trending market, as you guys can see, right? So what I'm doing at this stage is just speculating and just showing you some of the possible outcomes that we may see in as far as the Volatility 75 index goes, right? Anyway, let's zoom in and see what else is happening in regards to the daily chart. What do we see on the daily chart that we should be paying attention to? Remember guys, on the weekly chart we said at this point we may get a reversal if we do indeed get at least one bullish candlestick. However, now that we're on the daily chart and we've zoomed in a bit, we can see that we also have an overextended M structure over here, which has a neckline at that point more or less. It's an overextended M structure because actually that first leg is much higher than that second leg, right? And you guys know that whenever we have these M structures, as I said earlier, if you want to see price breaking below that neckline, heading back to that neckline to test it, and at that neckline is generally where we look for those potential selling opportunities, right? So I'm just going to add a neckline for this structure, which is the M structure. Let's have a look, let's have a look, let's have a look. We could say that that's our neckline. The next thing that I'm going to do, guys, is to utilize the Fibonacci retracement tool just to see if that neckline actually aligns with any key numbers that we have on the tool. So just bear with me, guys. There we go. We could see, or we can see rather, that the neckline actually aligns with the, we could say, 61.8% Fibonacci level, right? And just remember that support and resistance, or rather necklines of M structures, are not lines, they are areas, right? So in other words, we could say that this whole area over here is the neckline of this M structure. I hope you can see that, right? And what this means, guys, is that because we have this level aligning with the 61.8% Fibonacci retracement level, should the market from where it is head up to this level, at this level we may, or we should be looking for those potential buying opportunities. And that is because we have confluence. Number one, we have the M structure. Number two, we have the neckline being broken to the bottom side. Number three, we would have price come back to the neckline to test it, and the neckline would or rather aligns with the 61.8% Fibonacci retracement level, right? So we would need further confluence at this point. We would need further confirmation before we sell, but this would be a good level to be looking for those potential selling opportunities, right? Anyway, what else do we see on this chart? I don't see much. I'm just gonna head down to the H4 chart and let's have a look. And just to recap, remember on the daily chart we spoke about how we have the small M structure, and we said that it aligns with the 61.8% Fibonacci retracement level, and should price come back to this level, at this level is a good area to be looking for those potential selling opportunities, right? But now that we're on the H4 chart, what do we see? On the H4 chart, we can see that we have this area over here, and in my humble opinion, it's a bit choppy. It's too choppy, in fact. I don't see any actual buying or selling opportunities, and in my humble opinion, the best thing to do at this point in time is just to wait and see what happens next, because at this point in time, the market is just too choppy. We don't have any actual or proper market structures at this point, right? It may be good to actually wait for the market to reach this level and then evaluate and see what happens. But at this point is where I would love to see price head back to, and at that level I will most likely look for selling opportunities. However, right, just keep in mind, let me just go back to the daily chart. Just keep in mind that on the weekly chart we spoke about how we may potentially have this pattern, right, which is an inverted head and shoulders pattern, and I said that at this level over here we're just waiting for one candlestick to close as a bullish candle, and if it does, we may actually see the market head up to around this level.